Hello there, welcome to the programme. Today we're discussing market drivers, specifically forex moves with Mike Ingram of BGC Partners. Mike, hello to you. So the US dollar has already begun the week on the defensive really after the US economic data. It came in shy of expectations, as well as another missile test by North Korea at the weekend. Do you think that this weakness will remain?
Yes, indeed, Katie. If you look at the positioning as indicated by the latest CFTC data, it does seem that the dollar bulls are slowly rolling over. If you look at the net long positions for the speculators, it's at the lowest level since mid-October of last year, which of course predates the US presidential election. I mean, it has a number of analysts scratching heads because, of course, the market remains reasonably certain that the Fed is going to move to hike rates once again in June. But I think that there's generally elevated levels of policy uncertainty emanating out of the US. That's very much in the political sphere. Be interesting to see what various Fed speakers during the course of this week have to say on that subject, if anything. But yes, as I said, a lot of stale bulls out there on the dollar, and that's driving a lot of other crosses.
And how is this impacting the other crosses then? What ones have you got your eyes on?
Well, I think cable remains quite interesting. We've certainly got quite a lot of static resistance at the 1.2960 level. We've got some key macroeconomic data coming out for the UK over the course of this week. We've got the inflation numbers for April in tomorrow. We're following that up with employment numbers on Wednesday, and then topping off with retail sales on Thursday. And of course, you've got the ongoing narrative, the UK general election. So it'll be interesting to see if that's enough to carry onward and upward through the 130 level. If we're looking across the water to Euroland, despite Mario Draghi's best efforts at trying to talk down the economic recovery, we're going to get that second print of Q1 GDP numbers out of the Eurozone. And I have to say, the Eurozone of the major economic zones globally is the one that's been hitting it out of the park in terms of the incoming data. So it's going to be interesting to see how long he could hold back that the market's expectation that that they're going to look to taper from the ECB and eventually to tighten. Again, we've got a whole host of speakers from the ECB in during the course of the week. We've got Yves Mersch, we've got Lachtenschläger, we've got Jens Weidmann, and of course we've got the man himself, Mario Draghi. So it'll be interesting to see what kind of tone goes there. But I mean, really, I think that he's struggling to keep that between below 110 v the dollar now on the euro. And generally speaking, though, despite all these uncertainties you mentioned earlier on, Korean missile test, the big picture actually is that people are taking away that volatility skew. If you look at FX vol overall, it's the lowest level since September 2014. So of course that's one of the things which are perhaps undermining performance of some of those safe havens such as the Japanese yen or the Swiss franc. In terms of the yen, I think you've got the re-risking of markets against, as you say, that general weakness of the dollar. So that looks as though that's going to be range trading 113, 114.
This FX volatility since 2014, this is quite significant. What is this telling us about what's going on?
Well, it's not just FX vol which is low. You're also looking at VIX vol at multi-year lows. You've got V2X vol, the Eurostoxx 50 implied vol low. Commodity vol is low. It seems to be very strange because, as I say, it is rather at odds with some of the things which we know are going on in the world. A lot of it geopolitical. I'd have to say the situation in the US on Capitol Hill is looking increasingly chaotic. You touched upon that, declaration from North Korea over the weekend. That's done little to shake sentiment over in Asia, and I can't help but feel that perhaps there's a certain amount of complacency set in. Of course, the market bulls would say, well, actually the reflation trade is still in place, even if the reflation isn't coming from where we'd expected it, because 6 months ago we were expecting it to come from the US. Well, that clearly is not happening, at least at the moment. What's happened is the Eurozone has picked up the baton of that, and as I mentioned earlier, it's one of the reasons reasons why I think it's going to be very, very difficult to see the euro hold below that 110 level versus the US dollar. But overall, people are sort of reasonably happy with the global economy, even if the US is disappointed. So I think if we had a situation where there were alarm bells in the Eurozone right now, or perhaps broader issues outside of emerging markets, we know we had the Chinese data overnight looked a touch soft, but people are reasonably happy, certainly with emerging markets ex-China. If you saw weaknesses either of those two areas, then I think all of a sudden you'd start to see a de-risking of market, and from these very low levels of implied vol, you could actually see quite an explosive move.
All right. There's a warning there from Mike Ingram of BGC Partners. Thank you very much indeed for your time today. I appreciate that. We covered all bases there for the forex moves expected this week.